Hi guys, this is Duality Markets and welcome to my second video of this series, which is basically on the topic of exits, planning your exits. So when will you be taking partials? When will you be taking entire exits? Kind of avoiding these crashes after your exits. These are just few examples from some of the past trades I've taken from my trading journal. So without wasting any time, let's just quickly dive into it. So for me, exits are just of two types. One is exiting into strength and then into weakness. Okay. So today we're going to be focusing on the strength part, and for which we have some criteria in hand. So criteria number one, location, under which we are focusing on overextended stocks. Criteria number two is effort, which is basically volume, or let's just say magnitude of volume, relative volume. So in this, we need the price to be we need the volume to be very ultra high. So overextended market, ultra high volume, and the third and last criteria for this is result, which in volume terms is basically price from high to low, or vice versa, it's the same thing. So we are just talking about the spread here, and let me just explain what is candlestick spread. So this is your candlestick, let's say. This is your close, this is your open, this is your low, this is your high. So the distance the candle covers from its high to low is your candlestick spread. And we are looking for a very high spread. High, or again ultra high candle spread. Okay. So just let's one by one, let's discuss what is a high spread candle, what is ultra high volume, and what is a overextended market. All right. So this is your price. And this is the moving average. We are looking to exit our first partial right here, here, and here, the current market. See. So basically the distance between the closing prices from this EMA is pretty high. Pretty high. And right now also pretty high. So these red boxes is basically your over extended price, and this is your criteria number one, which is now met right here. In the same place, when the market is overextended, only then we will jump to the second criteria, which is, if you remember, effort, volume. So let's just say this is your volume indicator. Volume is something like this. On an average, the relative volume is somewhere, this is the average of volume, and we need to be focusing on such volumes. Sometimes these also, but this is less and this is very high volume. So these two are called your ultra slash very high volume, and this you can just say is high volume. Okay, we are looking for ultra high volume. Simple. Last criteria number 3 was result, which is price, candle spread. So basically, in this same region, we want a candle. Let's say we are long traders, we are swing traders, we have bought here and we are looking to exit the stock. I want a big, huge green candle in this overextended market. Basically, if the previous candles were something like, let's say, of a spread of 2%, 1%, 5%, 3%, and suddenly you see a big, huge candle, which is, let's say, 15% candle, comparatively, this is a pretty high spread, right? This is where I want to see the volume indicator. The volume should be also pretty high. Something like this versus the average volume. So your criteria number 1, market is extended, is met. Criteria number 2, ultra high volume, met. Criteria number 3, very high candlestick spread, met. Once all of this comes into play together, this whole condition is called a buying climax, which is the crux of this whole video and kind of how I exit into strength. Okay, this is a part of strength. Now, what does this mean? Why am I saying this huge green candle with a lot of green volume, great price action? Why am I saying to exit? So see, if the price was going, let's say, making bases, breaking out, going up and up and up, there will be traders who miss this breakout. There will be people who miss this price action breakout or retracement, whatever. There will be traders who miss this move, this whole big move. There will also be people who miss this breakout, this breakout. Now, can you imagine the type of FOMO this is creating? If someone is just seeing the price move and move and move and move, they missed this, they missed this, they missed this entry, missed this entry. Suddenly, all of these FOMO traders is gonna buy the stock now. So that is why you will see a lot of volume is coming in when the stock has already gone up, like 2x, 3x, whatever. And this is the kind of candle you will see. But all of this is just retail buying. So why is the volume so much? This is not just retail, this is also in institutions, right? But what is the smart money doing here? All of this buying coming in from these FOMO traders, retailers, all of this buying volume is getting absorbed by the smart money. Because smart money have big pockets, big orders, big quantities, and they need a lot of liquidity to exit. That is why this whole big volume candle is printed. So buying climax, basically the idea is a lot of FOMO buying, a lot of buying liquidity entering the markets. That is where we think that the smart money must be exiting some. So that is why at such market conditions, when everything is looking pretty good, great price action, great volume, overextension, so much return, everyone is happy, euphoric market, that is when the smart money dumps. So that is why buying climax, end of buying, this is what a buying climax means. Like, this is the psychology behind that. So let me just show you few examples in my past trades. So let's check this IDVI chart. So I bought here. In the next 2 days, can you see the type of candle this is? So basically the spread of this candle is huge. Can you see the type of volume? Ultra high volume. So out of 3, we have at least 2 things met. Okay. But this is just a screenshot from my journal which doesn't have that EMA or indicators. But if there was just a simple 50 EMA or whatever EMA you use, this closing price is pretty far from this EMA also. So third part is also met. So basically overextension is done. The spread of the candle is pretty high. That is done. Amount of volume is ultra high, abnormal. That is also done. So this was just a like bookish buying climax example, and that's why I was able to exit here, and you can see the stock falling after that. Right. Similarly, you can think of this Subaros trade also. Similar manner. This B is my buying. This is my selling. See the amount of volume. See the amount of spread. Both are ultra high. Ultra high. Ultra high. Compared to the previous volume. Compared to the previous candles. Pretty high. Your EMAs should be something like this. We are overextended. Another buying climax. So this is where you can, plan your exits. So similarly, using this when the market is strong, when your stocks are strong, you are holding a lot of profit, but you are looking to exit. Buying climax is a thing coupled with the 3 criteria model: overextension, high volume, high spread. That will kind of give you a sniper exit sometimes. So see, correction, smart money dumps, 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 smart money dumps. This is like the whole point of this video. So we have covered just the strength part, which was this: planning your exits when the market is in strength. So let's say we were holding 100 shares. Whenever you see a buying climax, when the stock is in strength, maybe you book 40. And the remaining 60 you wait for weakness. Now let's come to weakness. What is weakness? So weakness is basically when your stock is breaking down. Breaking down what? Previous strong lows / demand zones. So that is when once you see after that buying climax, you are waiting. Maybe the stock will come down, maybe the stock won't. We don't know. We are not predicting the market. We are just following the rules. When we see a buying climax, we are taking a partial. When we see the stock is breaking down our previous structure, lows, we are booking the remaining. So basically the point is trailing. How do we trail? Either you are just using price action. But the problem with price action is this is subjective. My definition of strong lows is pretty different from most of the traders, like all this BOS and all. I don't see all this. That is a different topic for maybe some other day. But problem is price action is pretty subjective. Objectively, you can use some indicators. Let's say ATR, average true range. You can use 2x ATR or maybe 1.5x for trailing. You can use simply your EMAs like 10, 21 day. So let's say the price is doing this. This is a moving average. You can see a kind of candle which is being printed right here is a huge buying climax coupled with a very high volume. This is where you can plan to take a partial. Okay, so let's just add an arrow. Okay, this was your first exit. Now out of the 100 stocks we have sold 40 here. Still we are remaining with 60. So till now everything is great. The stock is pretty good. We don't know how much more it will go, but a climax is at least printed. So this was an opportunity to take a good exit and book some good profits. Now the stock is, let's say, flat. This is your, let's say, 21 EMA. Price has not broken it, so we are still holding this 60. Let's say price again goes up. We are still holding this because there is no reason to sell. That is why I do not ever keep targets. Because as stock traders, you don't know how high the stock can go, right? Now let's say again you are facing this buying climax condition. So now we are remaining with 60 stocks. Let's say you are pretty positive that this stock might go even further. So let's say just take an exit of half of that, maybe 50%, 30. Now we are remaining with 30 stocks. So the price is now starting to correct a bit. This is your 21 EMA. And you see a candle something like this, breaking this 21 EMA. And there is also some volume. So basically this whole uptrend is now coming to an end, or at least a pause, both of which is bad for us. It will waste our time, right? So exit the remaining 30 here and you're out. After this, the stock might discorrect or be flat, whatever. We are just focused on markets like this. And this is basically how you plan your exits, right? So yeah, let me know what all other techniques do you use. But you can see in this chart also. Let's take IREDA for example. These bubbles are telling me the price is extended, coupled with very high volume. So this particular candle is a buying climax. That's why the price is coming down. Until date has not recovered much. Same thing you can use for the opposite side also. Basically, a selling climax. Same criteria, just flip it. So we want the stock extended below the moving average rather than above the moving average. So that is simply a selling climax. In case of market crashes also, you will see this. This is Nifty. So right here, as you can see, a lot of volume, very higher than average volume. Market is extended. You can see these gap downs, big candle right here. selling climax. So at least you will get an indication that market is going to bounce. Similarly, when the market is too high, buying climax, come down. That is how the basically market works. Let's take few more examples maybe. See, this big white candle, this right here. See the amount of volume here, here. So partial 1, partial 2, you are trailing something like this, it hits here, you are out. Even if you bought this breakout, you made money with this exit strategies. Similarly, you can try to see how your price action is acting with the EMA. Let's say, so basically this whole average is 50. For trailing, you can use a shorter EMA, which let's say take an example of 21 EMA. You can even add 10. So try to see what is the price action doing in this area. So see, it broke but recovered the next day. Broke, recovered the next day. So this is not an exit signal, trailing wise speaking. But can you see this whole distribution happening and breakout to the low, this candle? This is a good exit, trailing wise. Even after this whole climatic move, you can take some partial here and take the rest here. Similarly, you can use your ATR also. I'm using multiplier of 2, period of 14, you can take 20. Doesn't really make much of a difference, but a default setting is 14 and a multiplier of 2, and you can see pretty nicely it is tracking very trending stocks, giving you some exits here when this whole trailing ATR turns red, right? So yeah, my advice should be focus on the buying climaxes, price breaking your demand zones, breaking your EMAs, breaking your trailing stop losses. And yeah, let me know. Thanks. Bye bye.